Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, 17th day of June, 2020, and this is the daily report for gold and silver. We have gold trading up fractionally, up about $1, 1736.50 is the current bid, but we have seen it trade under pressure throughout the overnight session and fight to get into positive territory towards the end of the session in New York. If you read the opening letter, you realize that I believe that there are a number of fundamental reasons that combined really could propel gold to higher ground. However, the facts are the facts. It hasn't as of yet. We see the range compressing and we see a sideways trading pattern. We'll talk about that in detail when we pull up our technical studies, but first to the price board. Last night of $1,717, we did see gold recover. It is currently down 90 cents at $1,735.60. However, for the most part, over the last hour, it has been tracking a little bit higher, anywhere between 50 cents and $1.50 higher. As you know, if you've read my opening letter, I cite fundamental reasons why I believe that gold has really no place to go but up. And as far as I'm concerned, it's not a matter of if, but when, and the when is the $64,000 question. Spot gold is still trading higher this morning, currently up just about 50 cents. As you can see, it's still active to $1, 1726.61. Silver is trading moderately higher, up about 5 cents and currently tracked at $17.70. Both platinum and palladium are lower on the day. Platinum futures are down by a total of $7.30 at $836.60, and palladium has given up about 0.7% and is currently bid at $19.2940. And the dollar index was fractionally higher today, up just over 0.1%, 97.055. Let's take a look at our technical studies. The first chart that we are going to look at is a very long-term view of the market through a weekly candlestick chart. This has one Fibonacci retracement that really goes back to the beginning of the rally, which was the end of 2015, beginning of 2016, when gold hit a low of approximately 1,050, up to the top that was achieved this year at approximately 1788. What we can see is that after breaking above the 0.23% retracement level, it did come in, it made its yearly high, but on this weekly chart, we can see that over the last couple of months, we have had a defined consolidating market. We have alternating candle colors. That indicates congestion, and we have labeled this as a flat bottom, this double bottom here, but we do have a descending top. We have seen a series of lower highs. What that tells me is that the range is compressing. However, it continues to trade in a pretty wide but definitely range-bound manner. When we look at that, we can see that 1680 has provided real support. 1700 also has been pretty solid. We have broken through there, but we've seen buyers come in at that point. In terms of our levels of resistance, right around 1760. And so before we take a stab at the market, we either need to see a couple of things happen. Either A, it breaks above this descending top, this trend line here, or it begins to track lower. And if that happens, we want to look at our daily Fibonacci retracement, which shows a pretty critical area at 1708, and then these bottoms that come in here at approximately 1675. And lastly, I want to look at a very short-term chart. It's a 240-minute candlestick chart. When we do that, we can definitely see how it's been oscillating between this 1788 and the bottom here at 1680. However, it is on this short-term chart that we can see a fairly recent change in the demeanor of this flat bottom and descending top, because beginning on the 5th of the month, when it hit this bottom here, we saw a series of higher lows coming in, and we definitely have a series of lower highs coming in. So I do believe we're getting close to some sort of a breakout as we approach this apex. For the meantime, though, we are going to maintain our neutral stance. with no active trades in gold. We're going to wait to see if it breaks above or below the current trend lines. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.